I'm delighted that I've got actually here in the room with me Patrick Tiernan, who's the Chief of Markets of Lloyd's, the insurer. Before I have a conversation with him about the digital transformation and what it means for the wholesale insurance market, the specialized insurance market, we're delighted that John Neal, the Chief Executive Officer of Lloyd's, also recorded a short statement. So I think we first pass over to John and then we take it from there and have a conversation based on that. Thanks, Patrick.
Hello everyone, I hope you're all well. I'm John Neal, Chief Executive of Lloyd's Insurance Market, and let me say it's a huge privilege to be saying a few words today. Apologies, you're only getting my face on a screen. We've sent the better looking council member to join you on the ground in Brussels, but both Patrick and I are really honoured to be part of this event. It's an incredibly important forum, not just because of the leading voices represented, me excluded, but because it's a chance to get together to talk about how we can innovate and collaborate to help Europe become more resilient and better protected. That's what I wanted to say a few words on just now, the areas we can innovate and collaborate on to build resilience, before I hand you to Patrick to give a more focused look at the risk landscape as we see it, particularly around cyber. So, as we look at the world today, what's plain to see is a sheer level of uncertainty we're facing, from economics to politics and climate change to culture change. There's a host of pressing issues that are forcing us to rethink how we do things. We've been in that environment for a few years now, but what's surprising in that there've really been only 2 or 3 times in history where global uncertainty has matched the level it's at today, usually around times of conflict or revolution. For many, that uncertainty is an unsurmountable challenge, a dead end beyond which none can see. And while the last few years have taught us not to try and predict the future, yes, even in insurance, from where we see it at Lloyd's, we think there's a real opportunity to convert that uncertainty into a resilience, innovation, and collaboration that can help society become better protected against unforeseen events, which ultimately is what insurance is all about. We think that opportunity is particularly clear in Europe. For us, Europe has always been a hugely important region. We've been supporting customers here since we started 330 years ago, and for the last 3 years we've been operating as a fully established, locally regulated insurance company. That's Lloyd's Europe. Our focus has been to act as an additive player in the European market, offering our capacity, connection, and expertise where they're needed most to help protect people and communities across the continent in collaboration with, not competing with, the established domestic market here. As we look to provide for those needing protection, a few opportunities to collaborate particularly stand out. The first is in cyber risk. Europe accounts for just 1/6 of global cyber premiums, with an estimated protection gap as high as 90%. That gap sounds absolutely huge, but unlikely when you think of every single business that has a payment solution as an at-risk as it does, then that becomes much more clear. And with the cost and frequency of attacks increasing, we need to find ways to make sure people and organisations are protected fast and en masse. Given around 1/5 of global cyber insurance is underwritten at Lloyd's, including through innovative covers developed in our Lloyd's Lab incubator, we're really keen to lend that expertise to help build cyber resilience in Europe. A coordinated approach will be essential. Cyber risk knows no borders, so regulatory and research developments will be just as crucial as risk solutions in mitigating that threat. Patrick will be able to add more colour on how we're working to tackle this salient risk, but it really should be top of the list for all of us. The second should be climate risk. EIOPA, who I believe are in the room today, have estimated that 65% of climate-related losses in Europe are currently uninsured. Yet with 90% of the world economy signed up to reaching net zero by 2050, there's also a huge opportunity here to get behind the global shift to low carbon models. At Lloyd's, our aim is to be the insurer of the transition, working with all our customers to move to more sustainable models without creating costly cliff edges that leave our societies and economies at risk. To do that, we're getting behind innovation, developing cover for everything from hydrogen fuel to carbon credits within our market, ensuring the technologies behind transition are both viable and insurable. We're also relying on collaboration, knowing the risk is too big for any one actor to tackle alone, and knowing local markets will have the best understanding of their specific risks. So we're getting those voices round a table through initiatives like the Sustainable Markets Initiative and the Net Zero Insurance Alliance. I know many here have played a part in those efforts, and it provides strong evidence that we'll be able to meet the climate challenge at the scale and the speed it demands of us. And finally, the conflict in Ukraine has placed geopolitical risk back at the top of the agenda. I'll let Patrick speak about the work we've been doing to mitigate the fallout of that event, but let me say we've been devastated to see the damage it's caused all across our continent and indeed around the world, though I know many of the nations represented here have been right at the front lines of responding. We'll keep lending our expertise to deliver the global sanctions regime against Russia, and we'll keep collaborating to provide insurance solutions for the risks we see arising. It's why the landmark Black Sea grain corridor, providing safe passage for stranded grain and fertilizer from Ukraine's ports, has been a rare glimpse of encouragement in a bleak situation. It's demonstrated what's possible when insurers, governments, regulators and others get together in the same room to tackle complex problems. We look with hope to applying that same spirit of collaboration to help Ukraine rebuild once this dreadful conflict comes to an end. Because the solutions we find when we get together can genuinely change the world. If that's not too bold a claim to finish on, let me say thank you for listening and for joining with us to create a braver world. And I'll hand you to Patrick now to build on how we're seeking to support resilience and bravery for our partners in Europe. Thank you.
Thank you first and foremost to John for an inspiring and uplifting contribution to our conference. But I think John raised a number of very interesting questions. So maybe before we go into them, do you maybe, Patrick, want to say a bit more about the business model of Lloyd's? What makes it different to other insurers and makes you so confident that you might be able to deal with big risks as set out by John in a way that some other players might not be able to do so?
Yes, thank you, Nick, and good morning. So Lloyd's is pretty unique in its design. It is a global insurance market rather than an insurance company. And within our market, we have 91 insurance companies, or syndicates as we call them, writing over 60 billion euros of premium around the globe. And we're actually, you know, what's really interesting on a morning like today is we are innovative and forward-looking by design. That is how Lloyd's has always been in its 330-year history. It's always been there to look around corners and focus on the future and of risks that are emerging. We have licenses all across the world that allows us to convene capital, expertise, and thought leadership in the risks that are facing our customers, our economies, now and in the future. And if you don't mind me saying, Nick, on a morning like this morning, you know, our teams will be assessing the damage from the truly horrific earthquakes on the Turkish and Syrian borders that we've watched over the last 36 hours, because we will have a presence in that region. We will have coverage there, and we will have customers there that we'll be looking out for. And while it's our thoughts will of course be with the people and their families who have suffered this morning, this is, as John says, this is core to the purpose of Lloyd's. So even as we look back over the last 3 or 4 years, the areas we will have been working on are those there's exciting innovation, but there's the very tough human tragedy and geopolitical issues. We met in the last 12 months doing work on Ukraine for the various Western governments. We've done an awful lot of work in disaster zones, both in the US, where we have an awful lot of business, but also in emerging economies through the Sustainable Markets Initiative, where Lloyd's leads the insurance task force. And then, of course, throughout the pandemic, Lloyd's was at the forefront of the insurance efforts to look after customers in that time. So that's what we do. That's what the market was put in place to do. It's designed to be to act as complementary to local domestic insurance companies, and in fact, on our platform, Nick, we will have many of the biggest insurance companies of the world, the household names that everybody listening today will know about. 3 of the top 5 insurance companies in the world, in AIG, AXA, and Chubb, they participate on Lloyd's platform because it gives them something that they don't have elsewhere. 4 out of the 5 biggest reinsurance companies in the world, 3 of whom are European, in SCOR, Munich, and Hanover, they participate on our platform because we bring something that you can't get elsewhere. It's something pretty unique in terms of the mindset, that convening power, and that ability to sort of lean into risks that are pretty difficult otherwise.
In a way, put simply, one say you kind of the reinsurer of the reinsurer.
I think the way we think about it is that we like to think that we would do today what others don't, so we can do tomorrow what others can't. We've sort of leaned into that as the way we think about things.
And given your global reach, what role does Europe, and specifically the European Union, play within your business and in your strategy going forward?
Yeah, I mean, I think Europe is absolutely critical to our strategy. I mean, I think one of the myths about Lloyd's is that it's a UK insurance company. It really isn't. It's a global insurance market that is headquartered in London, and headquartered in London because London has been for a lot of years the epicenter of the insurance industry because of its trading links. So as we think about Lloyd's around the world, 60% of it is based in North America. We might get into that because of the wholesale market over there, and then the other 40% is equally distributed across Europe, UK, Australia, New Zealand, and the rest of the world. So Europe is absolutely critical, and Lloyd's Europe, which is as John said, is our fully licensed and fully staffed insurance company based here in Brussels, in Bastion Tower down the road. That is our sort of commitment, our investment in the longevity of those relationships with our European customers. And I think because Lloyd's is itself a regulator as well as an insurance market, we really value those close ties that we get from in Brussels, and we get with the regulators and legislators around Europe in terms of bringing the learning we see from elsewhere, but also taking the learning and understanding the direction of travel of our key markets. And interesting, just listening to Commissioner McGuinness in terms of the digitalization of currency in Europe. Well, Lloyd's is on its own journey. Even at 330 years old, you got to learn an awful lot. So we're currently deep into our digitalization journey of our market. We call it our Blueprint 2 program, or the future of Lloyd's. And in the same way as Commissioner McGuinness mentioned, data at the heart of everything that she thinks of from a customer perspective, we think along exactly the same lines. And that improved data, our digital currency is something we call the core data record, which is very detailed, but it doesn't matter. That data and that transfer of data helps with the core driver of insurance, which is the mutualization of risk. And that mutualization of risk based on better data and better understanding actually democratizes the ability to buy insurance. And that really, we think, helps drive growth in society, growth in economies where risk sits on the right balance sheet. So for us, Europe will be at the heart of what we're doing in the coming years. We see great potential to bring learning and take learning from what Europe is doing, and we hope to deepen those relationships going forward, and we may talk about the development of European markets.
Sure. I think, interestingly enough, you've started the digital theme, and I might take you up on that. John, in his intervention, identified cyber risk as one of the three main pillars of geopolitical risk at the moment. Maybe you want to elaborate a little bit more what Lloyd's is doing and why. I mean, John already highlighted that there's a huge insurance gap in Europe.
Yeah.
Can Europe fill that gap by itself? What role should Lloyd's play? How do we, to what extent is this a global problem that needs a global answer?
Yes, so like I think I said a bit earlier, Lloyd's is innovative by design. It's in our nature. So Lloyd's will have had the first motor policy, the first aviation policy, the first space policy, the first D&O policy, and 24 years ago, if you can believe it, we had the first cyber policy in Lloyd's. And these markets tend to grow slowly over time. But cyber, just due to the digitalization of our world, has really mushroomed in terms of its size. And Lloyd's, as John said, I think we're about a fifth of the global cyber market. So we think we've got some good data, some good insights on how that market is developing. And I think with the market share like that, we feel a huge responsibility in managing the maturing of that market. So a maturing of insurance market works best if more people buy the product and if the product is available in terms of price, in terms of understanding to more and more people. So in the US and Canada, the penetration of cyber is not deep, but it's sort of 15-20% and increasing quite rapidly. In Europe, it's been slightly slower to penetrate, and we think this is where Lloyd's really can help in a number of ways. Every insurance market, every consumer market is quite different. So we think that bringing the knowledge that Lloyd's have had into the European customer base is critical to this, and we can do it in a number of ways. Learning and education is such a key part of it, and in Lloyd's we have our Lloyd's Lab, which we're very proud of, which brings customer demand and product design together in the interests of getting products that customers want to buy and can understand. So that, I think, will be critical in Europe. And backing those products, you need capacity. And capacity is basically capital. That's the money that backs the risk. And again, Lloyd's brings the structure and the confidence to bring capital capacity from all around the world to deal with risks. So it will be capacity from Europe, from North America, from Australia, for example. That tends to come from pension funds or hedge funds, etc., banks that want a global spread of risk. And so actually, as we increase the penetration, it's better for customers. We think it's better for taxpayers because the risk is actually on balance sheets that can afford it. And it's better for overall global pricing when you've got that democratization or that mutualization of the risk pool.
I mean, it's interesting. You raised now the point about the availability of capital and bringing different capital sources together. Yeah. You also already talked about know-how, and I would like to come back to the know-how point. By having had 24 years of experience in the cyberspace, how do you bring technology, be it fintech technology, supervisory technology, into the process? You talked about Blueprint 2.0, yeah, in looking at new specialized levels of risk.
Yeah. Well, I think usually the easiest part of the digitalization program is the product design. The critical part is to bring the data in to do the right risk analysis and then the risk mitigation. Cyber is a really interesting point. We had a cyber symposium in London, bringing all four dimensions of the risk into place. So the law enforcement today, in Europe, in the UK, and the US, the sort of the spooks, the the more advanced folks who are kind of looking into the issues from tomorrow that are facing us, very much on the geopolitical side, as John said. Then the preventative folks, those who use digitalization and data to actually prevent the event from happening and mitigating it after there's a cyber attack, for example. The last piece is the insurance product. And I think cyber is really interesting. The numbers are phenomenal. John mentioned it there. So 6 trillion in economic damage from cyber attacks in 2021. The experts estimate that 85 to 95% of those losses were preventable from good cyber hygiene and good regulation. And understanding the digital products that are available to prevent those is critical to making the insurance more affordable. And I think that's really where the maturity that Lloyd's has seen can really be brought to the European market. And I'm a very simple person when it comes to this, Nick. So I probably can't give you a very strong articulated view of those patches and those hygiene things that are needed. But the equivalent really in the motor market is seatbelts, is the regulation, the enforcement of seatbelt wearing. There is cyber hygiene from a patching perspective and a few other things that really do change the dynamics. And I think that's where Lloyd's can come to play.
I think it's also interesting how you focus a lot on prevention and mitigation and not just dealing with the actual fallout of risks. Yeah. And I guess what you described at the moment can be equally applied to sustainability, the collection of data and understanding around sustainability. But you made one other really interesting point, which I would like to kind of maybe drill down on, and that is, you say you take the risk off the state's balance sheets. You kind of provide an alternative line of defense, which in the current fiscal environment is not a bad thing. Yeah. Maybe you want to say a bit about that, because there is a perception that the private sector, the private market is not fit for purpose when it comes to pandemic risk or cyber risk or some of the other natural catastrophe type risks.
Yeah. Well, I think, not to repeat the point, but I think if we've got good prevention, building codes and cyber hygiene, for example, and good geopolitical risk management, that does a huge amount to ensure risks are measurable and therefore insurable. But in terms of why we think it's a good idea to have risks in the private sector as much as is possible, it's because it's more efficient. So if we look at the US, for example, the penetration of insurance, so the GWP, the amount of premium in the market compared to GDP, is about 3%. In Europe, it's closer to 2%. And in the States, the economies tend to grow a little bit quicker. They tend to accelerate because risk goes to the most efficient balance sheet. And we're not sort of self-promoting here, but in North America and in certain European countries, my own, for example, there's more of a focus on the wholesale market. So wholesale being where it's difficult for risks to be placed in the normal, simple way. They're more complex risk. We put them into a secondary market. And that really is what Lloyd's is. Lloyd's doesn't really compete with the domestics. It's a sort of a secondary market where you give the more difficult, more harder to place, non-standard risks. And interestingly enough, there's an insurance executive who is quite critical of Lloyd's when he needs to be, mentioned recently that if in America, if Lloyd's didn't exist, they'd invent it because they want that wholesale aeration of risk to actually move it quickly onto balance sheets that can afford it. And I think there's great opportunity actually in Europe for that to happen, for Europe to take more of the risk off the public purse or out of the household purse or the company purse and put it onto balance sheets that have that diversification of risk and that can make it cheaper. But I would like to say, I don't want to say that it's all one-way traffic. There's a huge amount of learning that comes from out of what is happening in Europe into the North American markets. There's some fantastic advances in regulation, in tort reform, in prevention of leakage, let's say, sort of pointless payments in the insurance chain. Again, particularly Ireland is doing a fantastic job on that. And we bring those learnings to the States in the US that need that sort of confidence to make some reforms. So it should be quite a symbiotic relationship with maybe Lloyd's as a connector of good ideas, digital or solutions, around the globe.
Thank you so much, Patrick, because I think we addressed one of the key issues head on, which is kind of some of the risks associated with the adoption of new technologies. And I guess what you're referring to here with cyber can equally be applied to artificial intelligence and product liability, data privacy issues. So I think it's nice to address some of the risks up front before we come to some of the opportunities emerging from the digital revolution. But I do think it's interesting that both you and John are very optimistic about us being able to handle those risks.
Absolutely. And I would say some of the most exciting digital-based, data-based solutions in insurance were designed within the Lloyd's market in Europe and in some cases for Europe. John mentioned the grain corridor, which again has come out of relationships that were built between Ascot, who is the insurance company at Lloyd's, and Marsh, who were the distributor. Some of the same companies worked on some really, really important things for our communities. So there's an insurance company that came out of the Lloyd's lab called Parcel, whose cargo knowledge was built out of humanitarian work for vaccines 20 years ago in Africa through to the cargo markets in Europe. And it was Parcel, again with Lloyd's, who designed the insurance product to allow the vaccines for COVID-19 to be distributed safely at the temperatures they needed, with the insurance cover they needed around the globe. I mean, that's just a fantastic example of Europe and European innovation, risk, and Lloyd's all coming together. And I think you're going to see more of that. You know, we do it around the world as well. There's a product called Bounce, which is parametrics, which is, sort of geo-based triggers for earthquakes that is in place in New Zealand. We see sort of flood-based, let's say IoT type products that we've developed that are in the States. This sort of work, I think, can be in the heart of what we're doing in Europe, and we have this collective success and this collective progress in society as we take as much risk off the table as possible, and then focus on those difficult to measure risks over time.
Thank you so much, Patrick. It was a great pleasure that you're at our conference, but also here with me live in the studio. Thank you very much indeed.